Good day to all. I hope you all are staying safe at home. Okay, warm welcome again to the second lecture of the series. I introduced the concept of management accounting, its definition, and the other related things in the last lecture. Let's take a quick revision that we studied what we studied in the last lecture, so that we can have a link with the concept. Uh, First of all, we studied that what accounting is, like we revised what accounting is, and the three basic branches of accounting, that is financial accounting, cost accounting, and the third branch that we are about to study in this semester, that is management accounting. Okay, you all know very well that what financial and cost accounting is. Let me take a quick revision of management accounting. Management accounting is basically a tool which is used by the managers to perform three basic activities: to control, to plan, and to take the decisions. These are the three main activities that managers perform to assist the top management and to take the further decisions. I have quoted the definition given by CIMA, even where you have seen the stepwise formulation of strategies and how managers control and identify the informations and use it for their own purpose. We have seen the difference we have seen the relationship between um, the three forms of accounting. Let us move further. Today, first I'm going to take the characteristics or nature of management accounting. See, when we talk about the characteristics of any concept, this means that what we are about to study, we are trying to study the basic traits, how you identify, what you do in that particular area. Okay, let's begin. The first part, this is not very exhaustive, but many a times is being asked in the exams. So, and is a part of your syllabus. So, first function or the nature or the characteristic, it is useful in decision making. In what sense? The essential aim of the management accounting is to assist the management, the top management basically, in decision making and controlling. So, it is concerned with all such information which can prove useful to the management in their these kind of decisions for planning and for taking futuristic decisions. Then financial and cost accounting information. See, I told you while I was explaining the relationship between the financial accounting, cost accounting, and management accounting. Thereout, we studied that the basic information which is useful for management accounting is derived from the other two forms of accounting, that is financial and cost accounting. Means you utilize the financial accounting and cost accounting records to give analysis or to take decisions using management accounting. Means the data is used from there and decisions are taken by manipulating, by calculating the different options that we do have available here. Then the next characteristic is internal use. This I told before even, that as we have seen that in financial accounting we do have the external and internal both interested users, and we do have to give information to both internal as well as external users. But here in management accounting uh, and cost accounting, it is exclusively for the internal use. Means that we do not give this kind of information because it is confidential in nature. That how we are managing our business, how we are managing our costs is not something that we can share with the outsiders. So basically, the information which is provided by the management accounting is exclusively for the use by the management for the internal purpose only, and such information is not given to the parties which are external to the business. May it be the shareholders, creditors, banks, or how important they are, does not matter, but we cannot give the information to them. Then next characteristic is that it is purely optional. This also I discussed in the last lecture, that management accounting is a voluntary technique. It's a purely voluntary technique. Means that it's not mandatory. No law, no rule or no regulation is there from the side of the government or any authoritative body. It's like that it is voluntary. Whether a organization is interested in performing management accounting or not, it is up to their own wish. No option, no compulsion is there from the side of the user. But I would say that this concept of management accounting is that useful that beyond a particular level, organizations start using it. Means that they are forced to use management accounting due to its utility, because it is very usable. They are able to manage the things in a very nice manner. The usage taken out by the management accountants to perform the basic three functions, that is planning, decision making, and the last is controlling. Because these increase or enhances your profit somewhere or the other. When the organizations grow large, management accounting becomes a necessity. Though it's purely optional, it's purely voluntary in nature, means that there is no obligation, there is no statutory obligation to it. And its adoption by any firm depends upon its utility and desirability. Fine. Next concept we have concerned with future. As management accounting is concerned with decision making, from there only, when we say planning, we are planning. This means that we are planning for future. Maybe today we are planning for tomorrow. It's like that, it is futuristic in nature. It is related with future decisions, because the future course of actions are being decided and not the past. It's a very important point. It's actually an advantage also. Then last characteristic I would like to discuss is the flexibility in presentation of information. As I told you, like unlike financial accounting, in management accounting there are no prescribed formats for the presentation of information to the management. There is no authoritative body who gives you this kind of formats. Like we do have ICAI, that is Institute of Chartered Accountants of India, who gives the formats for balance sheet, this or that in the financial accounting. And we do have obligations that we have to publish a financial records, final accounts, etc. But it is not so in management accounting. The form of presentation of the information is totally dependent on the wisdom of the management accountants, that who decides that which is the most useful format, how to do the particular thing, how to provide a relevant information to the top management for further decision making. It totally depends on the utility of the type of information and the type of the scenario in which the management accounting is preparing. And I would like to quote one more thing here. Like you have seen that in financial accounting we report annually, whereas in cost accounting we report as and when required. The reports can be prepared annually, can be semi-annually, can be quarterly, can be monthly, weekly, daily, hourly. Same way as management accounting reports are flexible. It's not mandatory. There are no rules and regulations. It's not so that you have to furnish the information annually. It is all up to the requirement of the managers and the management. Okay. So these were the few characteristics or the points related to the nature of the management accounting. Slowly you will get to know that how it is, how it actually manages the business. Now let's move to the next part, that is the scope of management accounting. Scope term basically defines that how wide the scope is. Means that it not only includes financial accounting and cost accounting, but also like all types of internal financial records, internal audit, tax accounting, office services, cost control, methods and procedures to control. So scope of management accounting includes certain points. Let us see them. I have marked them in bullets for you. Okay, let's start with the first one, financial and cost accounting. See, I just informed you while we were studying the characteristics of nature. You know that very well that financial accounting records are like basically historical in nature. Means that you record a transaction when it already takes place, when it has already occurred. So that kind of historical data from the financial accounting helps to forecast. It helps to plan the financial activities for the future period. So thus, for an effective and successful management accounting, there should be a proper and well-designed financial accounting. See, without financial accounting or cost accounting, we cannot have the records of management accounting. It's necessary because we retrieve the information from there only. If I talk about cost accounting in this system, it is like same, that we do have the techniques of cost control. We do have standard costing, budgetary control. We have studied that in the last semester. We have decision making techniques like marginal costing. We have cost volume profit analysis. So these kind of various analyses are used by the management accountants for further decision making. The next is a very important point, that is budgeting and forecasting. So whenever a business plan its activities for future, forecasting and budgeting play a very important role. Forecasting basically helps in the preparation of the budget, and budget further helps the management accounting accountants to perform the budgetary control, that how much money do they have, what flow do they need to keep, how they would be investing it and utilizing it. Next is tax planning. In order to take the advantage of the various provisions of the tax laws, management accountants, they have to depend on the tax accounting and planning to minimize its liabilities, because they would like to save more funds for the business. So they do plan the tax accordingly. Somewhere or other, I must quote that the CSRs, the donations, all these things are somewhere or other part of that only. Not always, but many a times it can be due to that. Reporting to management, it is another point which decides the scope of the management accountant. For effective and timely decisions, there should be a system of prompt and intelligent reporting to the management. Because if the things are not timely reported, because you know that time is money in the market. So, but both routine and special reports, both are important. They are prepared for the submission to top management depending on the situation of the market, of the product, of the scenario. Middle or outer management or operating level management are also sometimes involved depending on the requirement, whether we need to involve them or not. So basically we are talking about reporting here. Reporting can be routine reporting as well as special reporting depending on the situation, that what kind of circumstances are being hit or what kind of circumstances are being faced. Then next point that we can discuss under scope, as I was discussing that it is having a very wide scope, we do have cost control procedures as well. See, you used to control cost in cost accounting, but here I would say that any system of management accounting is incomplete without the effective cost control procedure. So inventory control, labor control, overhead control, budgetary control, they all are somewhere or other are even parts of your management accounting as well. Now let us see the statistical tools that we use or we are having the availability for the particular management accounting. Various tools of analyzing and presenting statistical data, like we have graphs, charts, pie charts. They can be used for preparing the reports for use by the managers. So that why these kind of statistical tools are used? Quite simple, because these tools make the data orderly. They make the data presentable, because you are able to find and see the information at a glance that something is happening. Then we do have internal control and internal audit. Management accountant heavily depends upon the internal financial controls, like we do have audit and the check. Why? Just to plug the loopholes, if there are any in the financial systems of the concern. Because if they are not able to plug the loopholes, the money would go on flowing out, it would go on getting wasted. So internal control and audit is a very important part here out, because there they get to know where and how to minimize the costs, where the wastages are being happening. Then we do have next, that is financial analysis and interpretation. Management accountant employs various techniques to analyze and interpret financial data to make it understandable and usable for the management, so that they can use it. So that's analysis helps the management to achieve the objective of management in a more efficient manner. So the financial analysis and interpretation which is given by the management accountant is used by the top management for their further services. This last is like office services I'm talking about here, because management accountant is expected to maintain and control office routine, means the procedures like filing of the important documents, copying, communicating, electronic data processing, and other allied services related to the maintenance of the records which are necessary for the maintenance of the particular business. So this was it for the today's lecture. I must say that I hope you are getting to know that management accounting is basically an advanced branch, where the management accountants are trying to take the information from the previous records which have already been maintained in the form of financial accounting and cost accounting, and then they're making use from there and producing the records by analyzing, and they interpret the figures that they obtain from the analysis using the information that they obtain from financial and cost accounting, and that information is further used by the uh, top management to perform the three basic functions, that is your planning for future, decision making related to that, and controlling function. Means that they are trying to maximize their profit at this particular point of time. See, there was a basic drawback of financial accounting, if you remember, that financial accounting only records, it does not analyze, because till the time you're not analyzing, you're not able to take the steps in the right direction. So in order to enhance the profits, we need to take the steps in the right direction. So to fulfill this kind of activities, because this is directly linked with the profit maximization, have become mandatory, but it is not obligatory, it is purely optional in nature, it's voluntary. It depends on the organization whether they would like to go for the particular option or not. But as the growing needs of the business are there, organizations go on with such activities and then they perform the management accounting processes. Somewhere or other, I must quote here that management accounting is the most important branch or the wing of accounting, because it is that wing which makes the actual use of the records which are maintained at the cost accounting and financial accounting level. Okay, you all must take revision, and if you face any kind of doubts or any problems are there while understanding this, or if you need any help, you may contact me on my mail id, that is rashigupta.gn@jagannath.org. Thank you. That's it for today. Take care. Stay home. Stay safe.